How to navigate the current housing market in 2025, your complete guide to buying and selling smart. The housing market in 2025 is unlike anything we've seen before, with interest rates fluctuating, inventory challenges persisting, and new technology reshaping how we buy and sell homes. Understanding the current landscape is crucial whether you're a first-time buyer, seasoned investor, or looking to sell. Today, I'm breaking down everything you need to know to navigate this complex market successfully. Let's start with the current state of the housing market. As we move through 2025, we're seeing a market in transition. Interest rates have stabilized somewhat compared to the volatility of recent years, hovering between 6 and 7% for most conventional loans. This represents a new normal that buyers are gradually adjusting to after years of historically low rates. Home prices continue to show resilience in most markets, though the pace of appreciation has moderated significantly. We're seeing annual price growth of approximately 3 to 5% nationally, a stark contrast to the double-digit increases of previous years. This cooling has created opportunities for buyers while still providing equity growth for existing homeowners. Inventory levels remain a critical factor. While we've seen some improvement in housing supply compared to the severe shortages of recent years, many markets still favor sellers. The months of supply indicator shows we're approaching a more balanced market in some regions, while others maintain tight inventory conditions. For buyers entering the market in 2025, preparation is everything. Start by getting pre-approved for a mortgage, not just pre-qualified. A pre-approval letter shows sellers you're serious and financially capable of completing the transaction. Work with a lender who can provide this documentation quickly, as competitive situations may require fast action. Understanding your budget goes beyond the purchase price. Factor in property taxes, homeowners insurance, potential HOA fees, and maintenance costs. The 1% rule suggests budgeting 1% of your home's value annually for maintenance, though this can vary significantly based on the property's age and condition. Down payment strategies have evolved. While 20% remains ideal for avoiding private mortgage insurance, many buyers are successfully purchasing with less. FHA loans require as little as 3.5% down, while conventional loans may accept 3% from qualified buyers. Some first-time buyer programs offer even more favorable terms. Location research is more critical than ever. Look beyond the immediate neighborhood to understand planned developments, infrastructure projects, and zoning changes that could affect future property values. School districts, crime rates, and proximity to employment centers remain key factors, but also consider climate risks and long-term sustainability. The home search process has been revolutionized by technology. Virtual tours, drone photography, and 3D walkthroughs allow you to narrow your options before scheduling in-person visits. However, never make an offer without seeing a property in person. Pay attention to details that cameras might miss, such as noise levels, natural light patterns, and the overall condition of the neighborhood. When making offers, be strategic. In competitive markets, consider escalation clauses that automatically increase your offer up to a specified limit if competing bids emerge. However, always include appropriate contingencies for inspection, financing, and appraisal. These protect your interests and provide exit strategies if issues arise. The inspection process remains crucial. Don't skip this step even in competitive situations. Instead, consider pre-inspection services or shortened inspection periods. Focus on major systems like electrical, plumbing, HVAC, and structural elements. Minor cosmetic issues shouldn't derail a purchase, but significant problems require professional evaluation. For sellers, timing your market entry strategically can maximize returns. Spring traditionally brings more buyers, but the 2025 market shows activity throughout the year. Analyze local market data to identify the best timing for your specific area and property type. Home preparation is essential for attracting buyers and achieving top dollar. Start with deep cleaning and decluttering to create a neutral canvas that allows buyers to envision themselves in the space. Address obvious maintenance issues like leaky faucets, squeaky doors, and worn flooring. Fresh paint in neutral colors can dramatically improve a home's appeal at relatively low cost. Staging has proven effectiveness in helping homes sell faster and for higher prices. Professional staging typically costs 1 to 3% of the listing price but can increase the final sale price by 6 to 20%. If professional staging isn't feasible, focus on key areas like the living room, master bedroom, and kitchen. Pricing strategy can make or break your sale. Overpricing leads to extended market time and eventual price reductions that can stigmatize the property. Underpricing might generate multiple offers but could leave money on the table. Work with an experienced agent who understands local market dynamics and can provide comprehensive market analysis. Marketing your home effectively requires a multi-channel approach. Professional photography is non-negotiable in today's market. High-quality images are the first impression most buyers will have of your property. Consider virtual tours, floor plans, and neighborhood lifestyle videos to differentiate your listing. Working with real estate professionals is more important than ever in this complex market. Choose agents with recent transaction experience in your specific area and price range. Look for professionals who embrace technology while maintaining personal service standards. Interview multiple agents and ask for references from recent clients. Understand commission structures and negotiate when appropriate. While commission rates aren't set by law, they typically range from 5 to 6% of the sale price, split between buyers and sellers' agents. Some discount brokerages offer reduced rates but ensure you're not sacrificing essential services. Mortgage shopping requires patience and comparison. Don't just focus on interest rates, consider all loan costs including origination fees, discount points, and closing costs. Different lenders may offer varying terms, and the lowest rate isn't always the best deal when total costs are considered. Alternative financing options are expanding. Assumable mortgages where buyers take over the seller's existing loan can be attractive when the existing rate is below current market rates. Bridge loans help buyers purchase before selling their current home, though they come with higher costs and risks. Investment considerations in 2025 require careful analysis. Rental property markets vary significantly by location, with some areas showing strong rental demand while others face oversupply. Calculate potential returns including rental income, property appreciation, tax benefits, and expenses like property management, maintenance, and vacancy periods. First-time buyer programs continue to evolve. Many states and municipalities offer down payment assistance, reduced interest rates, or tax credits for qualified buyers. Military veterans can access VA loans with zero down payment requirements and competitive rates. Research all available programs before committing to conventional financing. Technology integration is reshaping the entire process. Digital mortgage applications, electronic document signing, and virtual closings have become standard practice. Blockchain technology is beginning to influence property records and transaction processes, though widespread adoption remains limited. Market predictions for the remainder of 2025 suggest continued moderation. Most experts expect gradual price growth, stable interest rates with minor fluctuations, and slowly improving inventory levels. However, local markets will continue to vary significantly, making regional knowledge essential. Economic factors beyond real estate directly impact housing markets. Employment rates, inflation trends, and consumer confidence all influence buyer behavior. Stay informed about broader economic conditions that might affect your timing and strategy. Regional variations remain pronounced. Coastal markets often show different patterns than inland areas. Sunbelt states continue attracting migration from higher-cost regions. Rust Belt markets are experiencing varying degrees of revitalization. Research your specific market thoroughly rather than relying on national trends. Climate considerations are increasingly important for long-term property values. Areas prone to flooding, wildfires, or extreme weather events may face insurance challenges and potentially declining values. Consider these risks when making location decisions. The key to successfully navigating 2025's housing market is staying informed, remaining flexible, and working with experienced professionals who understand current conditions. Whether buying or selling, approach the process with realistic expectations and solid preparation. The market rewards those who do their homework and make informed decisions based on current realities rather than past experiences or future speculation. Success in today's housing market requires patience, preparation, and professional guidance. By understanding these key factors and strategies, you'll be well positioned to achieve your real estate goals in 2025's evolving marketplace.